Hi, I'm Pattu from freefincal. Let's talk about which mutual fund should I sell to rebalance my portfolio. Now, this is something I can never understand why so many investors have a problem with portfolio rebalancing. There's a lot of inertia. There's a lot of it's an extremely simple act of resetting the asset allocation, but a lot of people are scared about how to do it. They don't know how to do it. They say I want worked out examples. I don't understand how to do it. I'm scared of tax. I will try to rebalance by adjusting my investment accordingly and change my asset allocation and so on. That's not the idea of that's against the idea of rebalancing. First of all, see, I talked about this in a separate video. The idea of rebalancing is basically a way to reduce your risk. Now, to give you a very crude idea, now when we start investing, we try to have some expected return at some level, let's say at that level. But once you start investing, because of the market fluctuations, the overall portfolio will start fluctuating. So let's say you have 50 to 60% equity, then the portfolio return will fluctuate above that wild manner. There'll be huge ups and downs. So this is without rebalancing. Now, the whole idea of rebalancing is that you reduce these fluctuations. You reduce these fluctuations. So it's extremely crude, but that's the general purpose of rebalancing. That is, you have an expected portfolio return in mind, but because of market volatility, if you don't rebalance, the asset allocation will swing wildly as per market conditions, and therefore the return will fluctuate wildly. If you do regular rebalancing, that is, for example, you start with an asset allocation of 60% equity and 40% fixed income. After 1 year, that becomes 70% equity and 30% fixed income. You remove 10% from equity and sell 10% equity and buy 10% of fixed income. Then you reset it back to 60-40. If you do that, then the fluctuations in the return will reduce over time. This is something that you have to look at your portfolio from time to time to actually realize. Many people don't do this, and I have done back tests on this to show that this happens. I have videos on this. There are multiple rebalancing videos. There are even more number of rebalancing posts at freefincal. Have a look at that. So this is the general idea of rebalancing. In addition to just having an expected portfolio return, what you should do is you should continuously vary your asset allocation. So your portfolio return will initially be something like this, and then it will, as you so initially it will be something like this, and as you tend towards your goal deadline, your equity allocation will reduce, and you have to get rid of your equity allocation much in advance and shift it to fixed income. So your portfolio return will also decrease. So again, the same logic of fluctuations. So without rebalancing, there'll be huge fluctuations, and you may not even get to that. But if you're able to rebalance, then you can significantly reduce this. And if you stick to the asset allocation schedule that you have, then you will be able to even further reduce the expected the fluctuations in the expected return. So this is the reason why you rebalance. You can't say I will do it by changing my investments. That will take you initially, maybe if you've just started investing, that may take you maybe a couple of months, but after a couple of years, that may take you six months to 1 year to adjust your investments. During that time, there can be another market crash. So you're just going to lose out the benefit of risk reduction by not selling one asset class and shifting it to another asset class. So now let's talk about simple examples of rebalancing. Let's say there are 4 equity funds, A, B, C, and D. Now, one or two of those funds can be in loss. Although your overall equity portfolio may have increased in value, say you are holding some thematic fund that can be in loss. So when you want to rebalance from equity to debt, that's the only example we will consider. Now you can just sell off that thing that is in loss. Then you are not going to get any kind of tax outgo because of the rebalancing. Then you can have a situation where two funds are similar. Then you can get rid of one of them. Then you can have a situation where one of them, for example, in my case, in my portfolio, Parak Parik FlexiCap has got a very high weight. That is one of the reasons why I added one more fund, the UTI low volatility fund, to reduce the concentration risk. I don't have to rebalance now. I did rebalance twice last year. In spite of that, Parak Parik does have enough weight. So as of now, I don't have to rebalance because my overall equity allocation is still 60% equity, 40% fixed income. But if the equity allocation departs from the target asset allocation, I can remove some concentration from some fund which has got excessive weightage. Then you can reduce some concentration risk. Now, if all funds have similar weights and similar returns, then you can just choose one, or you can remove from two of them, or you can remove from all of them. It doesn't matter too much as long as you maintain the overall portfolio asset allocation. As long as you do that, there's no problem. Some people say, I want to follow momentum. That is, there is a best performer, I want to follow the momentum there. I have done that personally. That is the reason why I am having so much concentration risk in Parak Parik. I followed the momentum. I invested more and more in Parak Parik. That's also fine. I mean, the point is, you should not regret if your call goes wrong tomorrow. Tomorrow, Parak Parik FlexiCap may crash the highest and I may lose a lot of money. But that's life. That you took that risk, so you have to live with the consequence as well. Now, if we have only two funds, Nifty and Nifty Next 50, I have already shown that there is no need to rebalance between them. That is, between Nifty and Nifty Next 50, there is no need for you to rebalance. Just focus on the overall portfolio asset allocation. This is why I keep saying, don't keep adding some gold, don't keep adding some international equity. Then if you have too many players in your asset allocation, rebalancing becomes a difficult step. Now, finally, let's say you have a situation where you have 50% of Nifty, 25% of Nifty Next 50 and 25% of S&P 500. And the overall equity is 60%, fixed income is 40%. Now, one thing is that you don't need to rebalance every year, because that will be an overkill for most people. Although it is recommended, most people will be unwilling to do that. What you can do is, you can rebalance when your equity allocation departs by 5%. That is, 60% becomes 65% or more, or 55% or less. Then you can do a rebalance. In such a situation where you have three funds like this, Nifty, Nifty Next 50 and S&P 500, you don't need to worry too much about the internal asset allocation. 50% Nifty, 25% Nifty Next 50 and 25% S&P 500. Don't worry too much about it. As long as the overall equity asset allocation is close to 60%, which is your target, then you can more or less just take some money out of Nifty, and if that is the top performer, just take some money out of it and shift it to fixed income. You shall be reasonably all right. So you need to have that courage to do it. You need to have the maturity to pull out money from a asset class or a fund that is performing well, and to shift money into another fund or another asset class that is not performing so well, relatively speaking. So that maturity is necessary for rebalancing. As long as you take care of the overall asset allocation, I don't think the internal mix matters too much. I have a very specific example for this, how to change it and so on. You can have a look at that in the post. But to talk about it would be a little cumbersome. But that's about it. As long as you keep the overall asset allocation in mind, you should be fine.